Hey, Dan here. Listen, I wrote an article this morning for the website, but for various reasons, I actually kind of wasn't able to really post it. And so my trusted sidekick, Scott McGregor, just said, "Hey, man, why don't you just do a podcast?" And I thought that was a good idea. So here's what I wanted to say. A couple things. I started to talk about AI, the ticker, the artificial intelligence thing. And then I also just kind of morphed into some time, some respect for your time, respect for your money, and all that. And it's important to me anyway. You might not find that it's important to you, but still, it's my podcast, so I can say what I want. So first, we'll talk about AI. Now, if you pick up a chart of that, and I'll actually do it here. You can see on this daily chart. If you're just listening to this, then you obviously can't see it, but I'll describe it. So I'm looking at this. On Monday, this stock broke through like bigly. It really broke through from Friday. The stock had a great move, but then on Monday, just this last Monday, it ran up even further, and it broke through 30, like, barely, before just like snap hooking lower, and the trading volume was over 100 million shares. It was 104 million shares, and the 20-day average volume was just 8.6. So this was massive volume. When you look at the run that this thing had here, okay, it was as steep could be. And you look at the volume, and that also, we got a real big jump in volume on Friday, the 27th. That's probably some kind of news. I forget, but this stock just really caught fire. And it doubled since this Friday move. So this has been a heck of a move. And what I want to talk about is this, that you can tell by volume when you compare that with price. And what I'm talking about specifically is this really steep price. You can tell what's happening with the stock. And from this one, I could teach a workshop just dedicated to this kind of pattern, and I have. But you can tell that this stock is being bought in a frenzy. There's frenzied buying. And if you think about any other kind of a frenzy, they only last so long before they get worn out. And so this volume is the key tell to what's happening. And you think about it in two ways. First of all, the most undisciplined shorts are finally covering. Think of all those effing morons that were crushed by those meme stocks like AMC and whatever else. I looked at the short interest on those things, and I was speechless because the short interest was so high and the stock was so low. It was one of those things where, personally, I actually took pleasure in seeing all these hedge funds get crushed, because I'm thinking, are you idiots so arrogant? Are you so arrogant that you're shorting the stock when most of the money has already been wrung out of the stock, and you're still short the stock? When did you start trading? Yesterday? And so they are getting crushed by these by the frenzy of real buyers that come in. And so you've got, and in this case, I know it was this case with AI, with C3 is the name of the company, C3 AI. They were getting killed. And then at the same time, the momentum traders came in and they're pushing the stock even higher. So they're competing with each other. Well, at some point, the competition reaches a climax, and that just happened to be on Monday, the 6th. You can see it in the volume. And so when you see this massive, and now I'm just talking about your trading and my trading, when you see this massive volume spike, you need to know that the people behind the buying, as the volume is just really high. You see the stock run up really high. That's the last of the Mohicans getting in. The poorly capitalized traders, a lot of times the most poorly capitalized traders. And why is that? Well, because well-capitalized traders don't do that. That's why they have a lot of money. So it's only the folks that don't have much money that do this. They got to get in on the action. They got to get in on the action right away. And so why are they buying the stock here? Well, I'll tell you, I mean, yeah, let me get rid of all this. Get rid of all this stuff. Erase all. Boom. Okay, why are they doing this? I'll tell you exactly why they're doing it. Because they didn't participate all the way up here. They didn't see it. Now, finally here, they're seeing it. Oh, well, if it's up tomorrow, I'll buy it. Oh, my God, it's up huge here, and I didn't buy it. And then Monday, wow, it's going to the moon. And so then they're buying it. You know, some sad sack bought it at 30 bucks. And then the stock reverses and it takes basically all your money away. And so what you need to understand is that the most important question that you can be asking yourself when you are trading these high momentum stocks is, who's behind me? Because for a stock to maintain its momentum, there has to be additional push. There has to be additional buying, aggressive buying, not just buying that says, well, you know, I'll wait for a dip. Those aren't buyers. Those are watchers. You want people that are reaching up for the stock higher and higher. And not only do they have to be there, but they have to have enough money to keep the stock moving up, in light of the fact that after the kind of run, say that AI had, after that kind of run, there's going to be so much supply from traders who did buy at lower levels and are saying like, you know what, man, now's my payday. I got to take this money and run. And so for you to be buying into this climax, you're going to get crushed. Now, I know what you're asking. Well, Dan, yeah, it's easy to say now when you can see the chart. Well, sure it is. But frankly, it's easy to say here too, because you got to look at this and say, okay, on this day, that's Friday, this thing had a heck of a move, like a big, huge move. At one point, it was up 30% in the day. This was a big move. Just you have to just understand. You don't even, if somebody said to me, okay, there was a stock that was up 30% in a day. However, do you know that like over the past 3 weeks, 14 trading days, do you know that stock's up 104%? And just today, then it's up 30%. So what are you going to do? You can't see the chart. I would say you got to sell that stock indiscriminately, because that's the kind of move that cannot happen. It just can't happen any further. And so you're not trying to catch the top with your sale, but you're also determined that you're not going to buy at what would obviously be the end of the rally. And so how do you avoid doing this? I'll tell you how. You just kind of have to have rules. I'm not even going to give you a rule for this type of thing. It should just be intuitively obvious to anyone who's been trading for any appreciable period of time. But what I will tell you is this, and hopefully this will help. You know, I've seen TV commentators, I've seen Kramer talk about this, where he'll say, and I haven't heard him say this in a long time, wow, look at this chart. This is such a great chart. And I'll look at it and I'll say, yeah, it's a great chart if you bought it 2 months ago or a year ago or last week. It's a great chart. And what I'm talking about is you're not seeing a chart with potential. You're seeing a chart that had potential and has realized the potential. So when you see these big spikes like this, you don't want to look at this and say, oh, this is an awesome chart. No, instead say, you know what? Damn it. I was looking at this stock here, but I didn't buy it. I was even looking at this. I saw this breakout above the 50-day moving average. I saw it break out and I was going to buy it, but then I got kind of psyched out, ran up one more day, or, gapped up and then it pulled back. And I said, you know what? Okay, I can't buy that stock. It's a failed breakout. And then I forgot about it. You can look at that and kind of flog yourself a bit. And then you say, I could have made a 136% gain if I had bought instead of moved away from it because I was scared. Now, that's a good way to look at this chart. I mean, it's unfortunate, but I can tell you from experience, it doesn't suck as bad as buying right at the top. I've done both. I've bought right at the top, and that really hurts, particularly if you're selling a lot of puts, assuming that the market's just going to continue to move higher. That was one of my initial experiences in the magic world of selling puts. When the stock implodes, suddenly those puts that you sold get really, really valuable. And that free money that you thought you were going to be taking is actually taken by the people that bought those puts from you, but that's for another day. The thing that I want to just go into here, and I'm going too long to even talk about the other thing that I wanted to talk about, is when you see these Bollinger Bands so stinking wide, so wide, wider than they've ever been before, by far. When you see them this wide, and then you see this even one day, the opposite Bollinger Band, meaning if the stock's moving up dramatically, these Bollinger Bands are widening. Don't track the Bollinger Band that the stock is running up. It's obviously going to be running up that band. You can see how wide it is. Instead, wait for this hook. I mentioned this to John Bollinger probably 20 years ago or more, when I said, yeah, hey man, have you noticed this, the hook on the Bollinger Band, when it gets really wide, like that tells you, I call it the Bollinger Band hook. And he kind of looked at me and he goes, okay, that's okay. That's a good name. It's not something that I discovered. He knew that. He knew this phenomenon. I just don't think he'd ever really thought to name it. So I did. And so I'll just tell you this. When you see the Bollinger hook here, it's time for Elvis to leave the building. So what do we do with AI next? You don't want to short this thing, but you don't want to buy it either. The typical scenario with this type of trade, and I've seen this so much, is keep it on your screen. But if you want to, here's what I do. Do not buy. I'll make that in red. Then I'm going to let you go. I'm done here. There. That's what I would do. Do not buy, because what you're going to need to see in order for this thing to really give you a nice entry is you're going to need to see it calm down. You're going to need to see a definitive hook, and then you're going to need to see the stock, just kind of trading sideways for a while. Let this catch up to it, and then somewhere over here, if the stock stops being so volatile, you'll get a good opportunity to buy. But right now, all you're doing is buying a massive amount of risk without much reward. So anyway, that's all I have to say about that. Also, by the way, look at this. I mean, doesn't this tell you that not something is happening, but something has happened? You look at this kind of volume, you just don't see that very much, but you have to understand what it is. It's like, I don't see this very often, but when I do, I know it's time to run for the hills. That's why you want to look at these initial moves. You can even do a scan or something for like unusual volume activity, and you can put a couple other things in there as far as, parameters, where it is and the chart and the 50-day moving average and how tight are the Bollinger Bands. But the real point is, if you don't see these things early, you definitely don't want to see them late. But if you're looking at charts as having potential, that's going to put you in the right direction, because you will see a lot of these things that start out and look the same as AI, and they don't explode like this did, but they're still high probability trades. And that's what you want to be in, is the high probability trade. And every once in a while, you're going to get aces that you split and then get the other two aces. Okay. That is what AI was. Now it's rags. Okay. All right. That's all I got for you. Hope you guys are all having a great day and an even better weekend. Happy Super Bowl.